how you should build your portfolios. Joining me is market expert Sunil Subramaniam. Sunil sir, good afternoon. To start off with, we did close off in a flat rate, but we did have a record low inflation print before us, and now from earnings front also, not too many downgrades. So, do you believe that it is just a picture perfect moment for the Indian markets?
Well, it's a picture perfect moment for the Indian economy, or not necessarily for the markets, because the two big arms which drive the market are DIIs and FIIs. And DIIs are wholeheartedly supporting, but the FIIs are not. So I would say it will be the pink when FIIs come back, and that's not necessarily linked to anything doubt about the Indian economy, but it's more linked to the international matters in terms of the trade deal and the tariffs. So I think that we would be much happier if the FIs change their mind about India.
So you said, what about President Donald Trump's comments that they could be nearing a trade deal with India, given that India has lowered its purchases of Russian oil. Do you believe that there's some progress coming in from there?
Well, this is like the story of the wolf which came, and it comes and it comes and comes. They say it's coming, but when is it going to come? So I think that I think it's time to stop. Mr. Trump, I think, used the occasion of Mr. Gore's approval by the Senate and the Congress to say some good words about India and say the trade deal is progressing. But we all know very well that there are red lines on agri, on dairy, on GM foods, on Russian oil. Though Mr. Trump claims that India has reduced Russian oil, that's more probably tactical, because oil is not a government decision; it's the refinery's decision, and naturally, based on the price and other things and the sanctions, they could have changed that. But that's okay. But the fact is that for the trade deal to get done, there needs to be traction on the by the trade talks itself. And Mr. Trump, I think, is more talking from a 10,000 feet view that Mr. Modi is his friend and India is a great country and we are going to do the deal. But when is the question? I think we need to see some more ground level concrete indicators from a trade level delegations rather than from Mr. Trump. So I think that we just have to wait and watch. But yes, he's not saying India is a dead economy. He has stopped saying bad things about India. So that's good.
Okay. So, sir, what about, you did mention about FIIs being on the sidelines, but do you believe that despite the earnings being very modestly, relatively better than the previous quarters, and the valuations have also gotten re-rated, but the ongoing AI trade play out is something that is going to be a hurdle for them to make a comeback?
No, see, actually speaking, the earnings was looking better compared to the very low expectations that we had. It's still in a kind of a single digit. I think mid caps probably there's a maybe 13-15% growth in earnings. But I don't see, I think large caps are in high single digits, and small caps, if you see the number of companies in small caps has been disappointing. So I'm not sure that the earnings, right, especially, and this is not a good quarter to look at the earnings, because the GST matters were all effective only from September 22nd. So the full play out of that, the festival season also, Diwali, has happened in this quarter. So this earnings season was itself not a very eagerly awaited earnings season, if I may say, especially from FIS. The second aspect is that, see, if you're still seeing the GDP growth rates for India are still coming in around the 6.5 to 6.9, depending on various people. And that's something which has already been discounted. See, when you say valuations, we tend to look at PE ratios. But I think that what FIS tend to look at are, one is the PEG, which is the future growth rates of the Indian economy, and undoubtedly because of the tariff threat, the future growth rate of India going from its current 6.5-7% to an 8-10% level definitely has got hurt. So to that extent, to the fact that we're buying India on a PEG basis and not necessarily on a current PE basis, that's number one. Number two is the fact is that if you take the Warren Buffett indicator of market cap to GDP, that's something also they do. So from a market cap to GDP, our GDP growth, right, has been along expected lines, right, on 6.5-7, but inflation is lower. So actually nominal GDP has come down. The budgetary expectation was around 10%, close to 9.9%, but the latest quarter showed only 8.8 nominal GDP. So actually on the market cap to GDP ratio, the GDP hasn't been growing as fast as they expected it to. Right, and the market cap also hasn't corrected because DIIs have been buying strongly and supporting the market from falling. So for an FII to think that India is cheap now, I don't think we are near that. India is still expensive, but they will still buy an expensive India provided the future growth justifies. And what the FIS will need to see, according to me, is some progress on the trade front, which would open up the US. Mind you, it's the single largest country, 30% of the world GDP is America, right? And so opening up of the US market to India is a crucial thing for India to achieve those big another 2% GDP uptick from the 6.5, 7 to an 8, 10% is when I think an FIS will make a decisive comeback. Until then, these quarterly earnings are better. Yes, we have protected the downside from the tariff hurt. That's we have done a very good job. But that's not good enough to put in fresh money. And so I think to that extent, the trade deal is very important from an FI return perspective. I don't think because otherwise, if the DIs are not supported and the markets are corrected, then FIs will be looking to enter because we look at a value market. But no way that India has been a value market will be a value market. We are always going to be a market where the growth rate has to justify the valuation. So that's the way. The only growth is the only solution for India.
Okay, okay. But Sunil sir, from second half perspective, the street has been, has the street priced in the double-digit earnings growth that everyone has been estimating? And what's your projections from that front?
No, see, look at it this way. The street today, the DIS are left with no choice. The retail investors are giving them cash. Even this month, though it was about 20% lower than the previous month, the DIS have still got 25,000 crores in pure equities. And if you add arbitrage and, sorry, not arbitrage, you add the hybrids into it, it's about another 10,000 crores. So about 36,000 crores fresh cash has come in. So the DIS are in a situation where they have to buy something. So it's not that they are buying because they see a good growth story, right? Yes, they are not increasing the cash balance. The cash balance average for the industry of the mutual fund industry is about the 5 to 6% level, which is normal. But all the fresh cash coming in, they are going in and seeking. Now the GST cut and the consumption boom has obviously made a sector rotation in favor of consumption. But it's not that the double-digit earnings growth is what has made the DIs invest, right? The DIs have to invest, and India's story is good enough. Like you said, when you started the conversation about we being in a sweet spot, yes, economy wise, we are in a sweet spot with a low inflation and with a decent GDP growth. So DIs have no reason not to invest in India. But it is not the earnings season. So if you see now, for the second half, they are obviously expecting a much higher growth rates because of the GST cut playing through in the second half of the year, right? That's very, very true. But again, like I said, I'm saying if the retail investors are giving money to the mutual fund managers, they have to go and buy. So the pricings of the support, buying support from the DIs will continue to remain. So our market, I would say, will still remain in a consolidation mode with a positive bias, right? Until the FIs decide to come back in a bigger way.
Okay, okay. So, sir, apart from earnings, we have the Bihar polls results tomorrow, and we did see some, volatility that came in the markets in the last hour or so. That the markets could be pricing in whether or not the NDA would have a clear edge in tomorrow results. But what are your estimates, and what kind of impact do you expect tomorrow we could have?
So I think that the market will immediately there will be a knee-jerk panic reaction either ways. It's a knife which will cut very sharply up or down depending on the NDA coming in, because Bihar is in the Hindi heartland. It's an important state. I think next to UP is probably the largest state in India in terms of number of seats. So it is an important state, no doubt, and both sides have pulled out all stops in terms of things. And the key things which are coming through from the opinion polls are that there's an increase in the voter share in terms of number of people voting has gone up sharply. That's number one. The number of women voters has also significantly increased. Now there's also a new party in the mix there, Jan Suraj. So a lot of the opinion polls that I have been observing say that it depends on this party, how much of a party spoiler it's going to be. Because if it gets a very high share, that's probably going to hurt the NDA. If it gets a very low share, then it will benefit the NDA, is what the opinion polls are saying. So that's why the market is on a knife's edge. There will be an immediate reaction. But my suggestion is that whichever way happens tomorrow, if the NDA wins, the market will touch new highs. If the NDA doesn't get through, then the market could correct. But it's a knee-jerk panic reaction, and no medium-term investor should worry about what happens tomorrow. because these are markets, short-term participants, margin traders, and those kind of equity traders who are punting on the result and doing that. It's not a place for the investor to be, and I would say, don't get worried about which way this cookie cuts tomorrow. That's okay. The market will absorb it in a few days. It'll come back to tracking earnings and inflation and RBI rate cut possibility, Fed rate.
All right. Some technical issues popped up. But yes, that was Sunil Subramaniam for
Can
us,
you
of
hear
course,
me?
taking us
No?
through how the markets have been and, of course, some uncertainty that came in for the markets. Yeah, Sunil sir,
Can
you were saying something about the markets not going to pay heed to much of the elections, and it's going to be in the usual course of manner.
No. I'm saying that the investor should not pay much heed. The market will pay heed tomorrow because there
Yeah.
are short-term participants, there are punters, there are margin traders who will try to bet on the outcomes and do. That's a normal part of the market's thing. There are speculators and there are investors. So I would say the market will react. I'm not saying the market will not react. Market will react strongly either way, but it's only a temporary phenomenon for a few days. And it will get reset. So, as an investor, you shouldn't worry about what's happening in the market tomorrow. That was my perspective.
Okay. All right, Sunil sir, with that, we have to let you go, but thank you for joining and connecting with us.